Here's how to invest in gold. Are you currently wondering how to purchase gold? A lot of people want to invest, nonetheless they don't realize how to begin. The simple truth is there are many techniques for getting started with investing in gold. Here are some of the more common ways to purchase gold, as well as the positives and negatives for each and tips. 1. Physical gold. Undoubtedly, buying physical gold is one of the most frequent ways people spend money on gold. With regards to how to invest in gold, there are many things to understand about buying physical gold. Here's a few. How to accomplish it. Buying physical gold is actually simple as it is the best way it sounds. You acquire gold items, like jewelry, coins, collectibles and just about other things. The purpose of most investors is usually to hold onto their physical gold, after which sell it into a gold dealer or other kind of buyer. People have a number of options in relation to where they may buy physical gold. They are able to purchase them at the store or online. Whenever they find the gold, they will have to store it whilst keeping it until they are ready to market it for a higher price. When gold prices increase, then investors can consider selling their pieces. The benefits. First pro is that physical gold can be a tangible asset, and history indicates that gold tends to increase in value as time goes by. Very few investments are tangible and also have a high probability of going up in price, even though the economy isn't doing too well. If you want a great investment you can easily hold, see whilst keeping within your possession, then look no further than investing in physical gold. Second pro is physical gold cannot be hacked or erased. Nowadays, folks have countless assets that they can invest in and are generally held online. A gold piece with your hand doesn't need the internet or any electricity to operate or anything like this. It really is a foolproof investment in relation to protecting it from hackers. Your third advantage of buying physical gold is that you simply don't have to be a professional. Perform quick research on the price tag on gold, then research gold dealers. Then you can find the gold items you wish to keep and then sell them off when you're ready. It's as easy as that. The cons. First, buying physical gold can be expensive. According to in which you purchase it from, you might want to pay commission fees. Even when you buy it coming from a private seller, you can bet how the gold will likely be expensive. If spending large amounts of cash upfront isn't for you, then you might like to think twice about buying gold, but generally gold is definitely worth the investment. Second con is storing the gold. It doesn't matter what kind of gold pieces you get, if you purchased it directly, then you're in charge of storing it. You should be careful with how it's stored, otherwise you may well be putting your gold in danger of getting stolen, damaged and even lost. The past major con that the physical gold, when stored by yourself, won't gain interest. You must secure the gold up until you decide it's a chance to sell it off. If you're looking to gain a little bit of interest in your gold items, then buying physical gold and storing it all by yourself is probably not the best option. Tips. Buying physical gold is quite easy. It's also straightforward. Just be sure you need to do just as much research as is possible into gold dealers before deciding what type to do business with, and make sure you research current gold prices because you need to try to find good deals on gold pieces. This could be seen as common sense advice, but trust us once we say it comes in handy when the time concerns purchase gold. 2. Gold futures. Gold futures are contracts which were standardized and they are generally traded on specific exchanges. Gold futures allow investors to get a unique number of gold, for example 100 troy ounces, at a price that has already been predetermined. However, the delivery transpires in a future date. How to buy gold futures. The first thing you need to do is open a brokerage account. You will find brokers that specifically cope with futures trading, so take some time when picking one. Next, you can trade gold futures, and just how it functions is you'll must deposit the absolute minimum money so that you can open a situation. When the price goes into the proper direction, then you'll stand to generate a profit, but you'll generate losses when it goes in an unacceptable direction. The benefits. First, you simply will not have to store anything. As previously mentioned, you have to find storage space when you purchase physical gold. With gold futures, this isn't a challenge. Secondly, lower amounts come to mind with gold's future. During the time of making a deal, you'll only be asked to pay a certain amount of cash. The others pays as soon as the agreement is signed. Another great thing is there exists a good amount of liquidity. In addition to that, however, you can day trade gold futures. This means there's a perspective to produce and withdraw profits regularly. The cons. There's only some cons. One includes that there is a major risk to trading anything, and gold is no different. Default risk can leave the most experienced traders inside the trenches. Also, gold prices can greatly fluctuate daily. It is simple to gain money, but you can easily lose it. Remember, the price of gold can be appealing at the time of signing the agreement, but they can drop as soon as delivery is made. One third con is the volatile from the marketplace. One day the markets may be good and then the next it could crash. In no time, there may be a phase as soon as the markets don't move much whatsoever. Tips. Regarding tips, it's all about opening a merchant account with a great broker. You can find dozens and many brokerage accounts, so compare as many as possible. Find one that will provide you with good advice on gold futures trading than one that doesn't charge a number of fees. The greater number of brokers you compare, the more effective. Also, research gold prices for a couple of weeks before making an investment in gold via futures. If the prices appears to be stable, then go ahead. If there's an excessive amount of volatile from the markets for these couple of weeks, then consider waiting until everything grows more steady. 3. Gold ETFs. Gold ETFs are a fantastic replacement for gold futures. You won't own contracts, but rather you'll be buying shares of any ETF. In turn, you'll be open to gold, hence why they may be called gold ETFs. How to do it? You may get a brokerage account via a broker that permits you to trade gold ETFs. Then you'll be able to select the gold product you want to purchase. It's as elementary as that. The pros. One of the best reasons for gold ETFs could it be acts like a hedge against inflation. Normally, this is the truth with a lot of gold-based investments. Should you own gold ETFs, then they are utilized to safeguard your assets up against the inflation and fluctuation of currencies. Gold is definitely a safe investment, and if you buy the proper ETFs, then you'll do your major favor. Second, it is extremely an easy task to trade gold ETFs. You will be only required to invest in a single unit of gold, that is with regards to a gram of gold in weight. Furthermore, it is possible to trade ETFs via your ETF fund manager or even your stockbroker. Third benefit is that you can take a look at stock exchanges and learn just how much gold is selling for. This can be done at any given time. If you believe prices are great, then go ahead and buy something, otherwise you can hold off until prices be a little more appealing. Another benefit may be the tax side of things. The sole taxes you spend is either short or long-term capital gains tax. Long-term is gold that is held for any year or longer, while short-term is under a year. The cons. One con is the fact ETFs can be expensive. Actually, they could be more pricey than other styles of investing, but they are often more lucrative. It's your decision to make a decision whether or not purchasing gold ETFs makes it worthwhile. That is actually the only major con related to buying gold ETFs. Tips. If you can, consider investing large sums of capital or enter into the habit of trading regularly. The reason being ETFs tend to be profitable than other types of gold investing. Basically, you can end up building a lot if you are prepared to trade regularly or invest large sums of money. Another helpful tip is usually to never choose a fund manager or ETF product since the fees are alone. Do a bit of research to learn precisely what the performance has looked like over the last few years. If everything looks good, then choose that fund, otherwise keep seeking another fund manager. 4. Purchase gold mining businesses. This can be the best way it may sound. It requires purchasing mining businesses that mine gold. You happen to be essentially buying stocks into gold mining companies. How to make it happen? You can get a stockbroker or investing firm. They may take your funds and invest it into gold companies of your choice. A different way to get it done would be to join an internet stock trading platform and spend money on gold businesses that are listed on the platform. You purchase a particular amount of shares and then sell them when you've made a profit. The pros. First, buying shares into gold mining companies is straightforward and thus is selling them. All that you do is purchase the amount of shares you would like, then sell them off when you're prepared to. Also, you may invest into several companies and increase your chances of making profits frequently. Second, the retail price swings may be huge, but they do typically take a while to take place. When you are patient, then you can definitely sell when these swings happen. Remember, in case a company is doing well and doing things right, then their stock could go up. Of course, if the price of gold is high too, then you might end up doing adequately. Third, buying stocks is beginner-friendly. It doesn't take a great deal of knowledge to shell out, nevertheless it usually takes some research into gold mining companies. Just do a great deal of research into several companies and discover what kind of financial reputation they already have prior to invest into them. The cons. The risk is about the high side because gold mining companies carry plenty of risk that may cause their stock to lower, whether or not the price of gold is high. Also, remember that gold miners put themselves in danger and stuff they generally do also can impact the cost of the company's stock. Investing in gold mining companies is as risky as buying almost every other type of stocks. Tips. There's only one really specific tip to remember. You need to research various stock trading platforms and make sure the ones you utilize have gold mining companies' shares available. Better yet, research gold mining companies and create a set of them prior to search for stock trading platforms. Then you could find out if those platforms offer shares in those companies. That is how to spend money on gold. As you can see, you can find advantages and disadvantages to every single form of investing method, so you may want to consider all the various methods to invest. Then you can certainly choose which technique to try. If you know how to invest in gold in today's economy, you are one step ahead. Learn more and get a free gold investment kit at https://preciousmetaldealer.com/. Article source: https://ezinearticles.com/expert/dm_Hinman/265145